If you own a home in Arizona or you're thinking about buying or selling one, property taxes are one of those things that can quietly affect your bottom line. They affect your monthly payment as a buyer, and they affect your net sheet as a seller. And if you don't understand how they work, they can cause a lot of confusion when you get your mortgage statement, your escrow analysis, or your closing paperwork. So today I'm going to break down Arizona property taxes in plain English, specifically from the point of view of a homeowner, buyer, or a seller. And do not worry, this is not going to feel like a tax class. Nobody has time for that or wants that much time in it. So first, let's just start with some basics, okay? In Arizona, your property tax bill is not just one simple county charge. Your tax bill can include taxes for the county, city or town, school districts, special districts, bonds, and other voter-approved items. That's why two homes with similar prices can have very different property tax bills. A home in Gilbert may have a different tax bill than similar priced homes in Chandler, Mesa, Queen Creek, or even Santan Valley because the tax districts can be different. Blah. So when you're buying a home, do not just look at the purchase price. Look at the full monthly payment, including property taxes, insurance, HOA fees, and anything else tied to that property. So now let's talk about how Arizona property taxes are calculated. I'll give you the calculation first. Its simplified version is basically this. The assessed value times the tax rate equals what your property tax is. But here is where Arizona gets a little confusing. Your tax bill is not necessarily based on what Zillow says your home is worth, what your neighbor sold for, or even what you paid for your house. Arizona property tax notice usually shows two important values. The first is full cash value, often called FCV. The second is limited property value, often called LPV. Full cash value is Arizona's version of a market value estimate for tax purposes, but it's done through mass appraisal, so it's not the same thing as a full appraisal or pricing strategy from a real estate agent. Limited property value is usually the number that matters more for calculating your taxes. Arizona has rules that limit how much the limited property value can increase each year. So generally it's around up to 5% unless there's a certain change like new construction, additions, changes in use, or corrections. And this is one of the biggest things homeowners get confused about. Your home's market value can go down, but your property taxes can actually still go up. I know, that's super fun, right? That happens because monthly payment, especially if you have an escrow account. Most buyers with a mortgage have property taxes collected monthly as part of their payment. Your lender collects a portion each month, holds it in escrow, and then pays the tax bill when it comes due. So when people say my mortgage payment went up, sometimes the loan did not actually change, the escrow portion changed because property taxes or homeowners insurance went up. When you're shopping for homes, your lender will estimate taxes as part of your monthly payment, but it is still important to review the actual property tax history. And here is a big one. Do not assume the seller's current tax bill will be your exact tax bill forever. If the seller had an exemption, owner-occupied classification, or a different situation than you will have, the number could change. Also, if you're moving from another state, Arizona property taxes may look lower than what you're used to, but you still want to understand the full payment picture. Price, tax insurance, HOA, and interest rate all work together. So that $500,000 home and that other $500,000 home may not have the same monthly payment. Now, if you're selling your home, property taxes matter in a different way. When you sell, taxes are usually prorated through escrow. And that means you are responsible for the portion of the year you owned the home, and the buyer is responsible for the portion after closing. The title company handles that math on the settlement statement, but it is something that affects your final net. So when we prepare a seller net sheet, property taxes are part of the estimate. And because Arizona property taxes are billed on a schedule, the closing statement may use the most recent available tax bill to calculate the proration. And if you are selling, you do not typically need to panic about paying the whole tax bill before closing unless title or escrow tells you something specific. But you do want to know that property taxes will be accounted for at closing. Another thing that sellers should know, buyers do look at property taxes. If two homes are similar, but one has a noticeably higher tax bill, that can affect how buyers view affordability. It may not make or break the sale, but in a market where buyers are payment sensitive, every piece of monthly cost does matter. Now, let's talk about the tax bill schedule. In Arizona, property taxes are generally billed in 2 installments. The first half is due October 1st and becomes delinquent after November 1st. And then the second half is due March 1st and becomes delinquent after May 1st. If your taxes are paid through your mortgage escrow account, your lender usually handles those payments. But I still recommend reviewing your tax bill and your escrow analysis every year. Now, why? Because mistakes do happen, values change, insurance changes, escrow accounts get adjusted, and it's always better to understand it before your payment changes and you're wondering what in the world happened. Now, can you appeal your property value? Yes, you can, but there are deadlines. If you get your notice of value and believe something is wrong, like the square footage is incorrect, the classification is wrong, or the value just seems off, you may be able to appeal. But you cannot wait until whenever. There are specific deadlines, so review your notice when it arrives. For homeowners, I always suggest checking your property tax record for basic accuracy. Does it show the correct square footage? Does it show a pool if you have one? Is the classification correct? Is your mailing address correct? Seen that happen too. Small errors can matter. And there are also some property tax relief programs in Arizona, including certain programs for qualifying seniors, widows, widowers, disabled individuals, and veterans. One that comes up often is the Senior Valuation Protection Program, sometimes called the Senior Freeze. But here is the important thing. The Senior freezes the limited property value, not necessarily the actual tax bill. Your tax bill can still change if tax rate changes. So if you think you may qualify for any exemption or relief program, contact your county assessor directly. Don't rely on Facebook comments or your neighbor's cousin's advice. This is where things get weird fast. The big takeaway is this. Property taxes are not just a once-a-year homeowner issue. They matter when you buy and they matter when you sell. They may affect your monthly payments, escrows, accounts, closing costs, seller net sheets, and buyer affordability. So if you're buying a home in Arizona, make sure that you understand full monthly payment, not just the price. And if you're selling, make sure you know how property taxes will show up on your closing statement and how they may affect the buyer's payment. At Heart to Home AZ with Realty One Group, we help our clients look at the whole picture and not just the pretty kitchen and the backyard. Although, let's be honest, we do love a good kitchen, and that's more fun. But if you have questions about buying, selling, or understanding the numbers behind a home in Gilbert, Chandler, Mesa, Queen Creek, Santan Valley, or anywhere in the East Valley, please reach out anytime. We are happy to help you make sense of it before you make a move. Heart to Home AZ with Realty One Group, we are your East Valley Realtors.